Welcome back, everyone. I hope you're all doing fine and well today, and happy Saturday. So, in this video, we're going to quickly discuss my trade, the one I have going on right now, okay, my open positions, and then afterwards, we're going to discuss my top trade setup, okay, the trade I'm looking forward to take next week. That's how we always do on the weekend videos, okay? And if you like the video, if you like the voice you hear, if you like what you see on the chart and you want to learn more, you can always go to my YouTube channel, go and give me a subscribe. And right here, when you're watching it, probably on LinkedIn, on TikTok, on Instagram, you can always follow me for more content like this, more educational content like this. And here and there, I always kind of like share my trade setup, okay, the one that you can also join. And don't forget, this is not a financial advice all the time, okay? So without further ado, guys, let's jump straight into the trade I have running currently. So first of all, I'm going to start with DXY. So DXY is looking quite weird. Okay, throughout yesterday, which was on Friday, we didn't really get any serious move or anything quite decent from DXY. As a matter of fact, like I said, personally, I am recusing myself from taking any trade that pertains to dollar. All right, and that is why you can see all my trades are mostly yen pairs, and I'm going to tell you all about that when we jump to my top trade setup. All right, but right now, let me just talk about my yen pairs. So CAD JPY is the first one. So right here, due to the data that came out yesterday, okay, we noticed that the CAD JPY, especially CAD JPY, actually did amazingly. Okay, you can see it successfully broke below here, and it also came quite close to the previous. I mean, it broke it, then it went back down. That's because of the CAD, because of the governor of Bank of Canada speech yesterday, late yesterday, based on my time zone. Okay, so it was talking about the inconsistency in the economy, how the trade war between the United States is going to affect the Canadian economy. If you want to hear more about that, I can't really summarize everything he said. I mean, literally that's what he said. I just summarized it, but I can't tell you in details what he said. But if you want to know more about what he said, I will advise you to just go ahead and check it out on. Just search it on Google. It's always there. All right. And then, secondly, what I want to share about this trade that actually intrigued me is the fact that consistency is key when it comes to trading and being patient. Okay, the trade almost tapped me out. Okay, when I took this trade, first of all, I took this trade quite early, and it's not super early like that. I mean, if you check like the fifth video before this one, you should be able to see the trade where I explain how I joined this trade, because I've been holding this trade since the 13th, since the 12th of this month. Okay, the 12th. This will make it like the second week that I'm still holding this trade, like the second weekend this trade has to run. Okay, so first off, I took this trade when it crossed above 50% Fibonacci right there, and then it went up. It went straight up, and my stop loss was slightly above 78.6% Fibonacci. Okay, it was above these zones. Okay, that particular zone. All right. So when it came all the way to this area, I gave up. Well, I didn't close the trade, but I gave up. All right. So part of me was just like, I'm done with this trade. Unfortunately, boom, 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 boom. How many days? Like 1, 2, 3, 4, 5, 6, 7. 7 days straight. All right. By the time you put it in and out of of the trading days, you know that that's like 10 days, give or take. Okay. It came down. It came down. That is the beauty of trading. Patience is key. You have to wait. Before you join a trade, you have to wait. When you join a trade, you have to wait. After the trade has been closed, you still have to wait. That's why they said waiting is what is actually 80% in this business. Okay, so that is just that. Tangible seems to be running very well right now. So I would also share my results with you, but probably not now. But as time goes on, I'm going to share that with you anyways. So moving on to USD JPY is another trade I actually took very nicely. And this is one of those trades that people like to people thought that using all those sniper stop loss for that, or that it will always work, and that's not the case. Okay, you can see that the moment I joined this trade right here, it never looked back. Okay, it never looked back, and this doesn't happen all the time. That's what some people don't really know. This is not something that happens all the time. What happens most of the time is what happened to Kajek. When you join a trade, Michael first drag you through the street of London, Asia, New York, before it now eventually drop. Okay, so that is what happened most of the time. But this is something that most traders doesn't really know, or they just don't care about. They just focus on profit. Okay, the first thing as a trader, you have to focus on your what? On your drawdown. You have to focus on your capital. Okay, trading is capital protection, capital allocation, as the case may be. All right, so that is just an advice from me to you. It doesn't mean you should follow it. Like I said again, this is not a financial advice, but always be patient for a trade to work out. Okay, so now my trading stop is right here at 105.75. 105.75. So I'm still holding on to this trade. Possibly it's gonna break below here, but I'm not holding my breath to that. I've really made some decent profit on this one. I've not really closed any of this position. It's still 100%. And probably on Monday, when market fully open, I'll probably start closing some positions. Some I'll start closing few, but that's not something I really want to do. Okay, before I used to do it, it really caught my profit margin a lot. Then I figured I should just stop doing it. So right now I'm holding it 100%. I can't lose this trade again. This is already 1:2.6, okay, profit. So that's very decent. If I can get 1:3, I'll possibly just gonna close it and then look for better entry, because definitely there's gonna be a pullback. But where the pullback is gonna last or where it's gonna reach, I don't know. So I'm looking forward to this. Silver, on the other hand, pulled back again, and because of this, I'm possibly gonna be adding into my top setup because it's back to this one again. This is like the second time we're gonna get this. The first time we go here, it came all the way back down here, went back up again, the market closed and it's closing down again. So is it gonna just get reversed to the downside, or is it gonna just retest this particular zone and then move back up? I don't know, but I would love to know. So on silver, I'm still holding on to the trade. Still very decent. Still makes money. Still making me money anyway. But the money keep getting reduced every time we get this kind of like crazy pullback. But I'm still looking forward to it, and I'm still holding on to the trade for as long as possible. The next trade I want to share is pound yen. So you all know I'm holding my pound yen trade, and it is looking very well. Okay, I'm also trading. I'm also trading this very nicely right now. Okay, right above here, this is where my trading stop is right now. So the trade is still looking very good. I'm gonna share the profits anyways. I'm gonna share at the end of all these things. Okay, so I'm holding pound yen as well. Makes absolute sense. Yes, let me go back to pound yen just for a minute. Don't forget, like I said earlier, almost all my traders have this particular demand zone that they need to counter. Okay, they have to beat. If I see pound yen beating this particular structure right at the bottom here, I'll look forward to add on to the trade. And this is also part of my part of my top setup. Okay, that I will be sharing with you later. So if you're not on pound yen yet, or probably you're still looking forward to buy, I don't know. I have so many people that were buying around it, and I was actually sharing with them like, why are you buying? You see the momentum, you see all these big moves on the downside, okay? And you're still buying, but they would literally not listen to whatever anybody else to say. And as a matter of fact, this is a series of them, okay? It's dog eat dog, all right? And there's nobody really knows, okay? So all you have to do is just make use of the data you have at hand to make decisions you can make, and just make sure you apply risk management. It's as simple as that, okay? So CHFJPY, I think it's also part of my stop setup. Yeah, also part of my top setup, because you can see right at the bottom here, we have a very interesting demand zone that could get broken, or probably the market will get rebound from that area again. So we're gonna see how this goes. But I have high hopes on this trade, and I'm looking forward to see it break below here, pull back nicely, and I look for further sell. That's gonna be categorized under my top setup as well. Euro Aussie, which is the second to the last trade I'm holding, it's another one very crazy. Okay, it broke below here. It broke below here, kind of like slightly break below here, this area, but couldn't hold on through. So we saw this a rejective candle, very bullish candle on Friday. We're going to see how this goes. Is it going to lead straight to my trailing stop right at the top here, or is just a little bit of a pullback that we end up going further down? I would love to see what this has to do in the market and how I can take advantage of this come next week. I'm not sure that I will be adding this to my top setup particularly, but if I see it on Edge Final top setup, definitely I will add it to my top setup. Okay. But anything outside of that, I guess that will be that. Okay. So yeah, I wanted to share my results. So let's see if I can pick it up from here. Let me take a screenshot and send it right here. So if it's gonna stay, yeah, that is it right there. It stays very nicely, right? So let's see if I can quickly show you. So this is the results so far. I took this screenshot before the market closed yesterday, and this is where I am right now. So first off, you can see that I have two silver positions, and they are all both running very well. One is in $12 profit. That's the second one I took because of the massive dump that happened. You all saw it. Okay, that pullback was crazy. So it got reduced to $12, and the first one I took right at the bottom is still running around $124, which is very good. I have two positions on pound JPY as well. Okay, using the same lot sizes of those ones are the same price level, which is like a bit of a mistake that I figured I should just hold on to for as long as possible. And that seems to be a mistake that end up being good. This is something I do every day, and this is intentional, guys. It's not like you should have closed one, I shouldn't have closed one. It's intentional. Okay, I didn't make any mistake. It was intentional. I mean, intentionally kept. It was opened by mistake, but when I checked the risk involved, it wasn't really much. Okay, I wasn't risking that much, so I figured let me just leave both. Okay, One thing you need to know about me is that I am always going to look after my risk. First off, it is the most important thing to me, my capital. So I'm always going to protect it. That's my priority. Profit, no, it's not my priority. You see my risk, the amount I'm willing to give to the market, that is my priority. And when I check it properly, this kind of like, averagely worth it. So I think I should leave. Euro dollar is another trade I hold. I'm holding and it's not doing very well. Okay, it's all of the pullback that happened. So I'm going to talk a little bit about that come during my top setup. Euro Aussie as well is another trade I'm holding. Yeah, that is the trade I'm holding. It was actually running very good before the print candle that we saw. So that's that anyway. And you can see CAD JPY also. I'm holding that one, the first one. This is the second trade. Okay, you can see that this one is strategically placed. Okay, the first one was the first entry. Okay, this was the first entry at 107.33, and this is the second entry after that spike I was talking about earlier. All right, so it's a DCA kind of trade. I took it at different levels with different lot size. You can see 0.1 first and 0.04. So this is a total of 0.14, and this one is a total of 0.12. So you know what I'm saying now. This I knew there could be a pullback on GJ. That's why I wanted to use 0.6 before. When I was not clicking the first time, probably internet kind of get in the way and the market could open. So I think you all know how this thing goes, so I don't need to explain in details. Well, fortunately for me, I'm still holding all these trades and they're all profitable. You can see there are 8 trades, and if you can count them one by one, you see they are all 8. There's no place to hide. So that's that anyways. So that said, let's jump straight to my top setup. Okay. And before I actually talk about that, I would first like to share with you what we have, the fundamentals we have next week. So beginning with Monday, we have the Japanese yen bank holiday. So we're going to get a slow move on the yen pair I'm holding. On Tuesday, 4 p.m., we have USD consumer confidence. We're going to see how that goes. On Wednesday, we have CPI in Australia. Okay, we're going to see how that goes as well. The market is forecasting an increase of 0.1% in CPI. If that's the case, I guess every country seems to be having a higher inflation rate. All right. Well, is it going to be the same with Australia? I don't know, but we're going to see how that goes anyways. On Thursday, we have the USD preliminary GDP, the quarterly GDP. Okay, I think the market is forecasting to remain the same at 2.3%. I guess we see how that goes as well. USD unemployment initial jobless claim is being forecasted at to get increased by 1,000, 1K, so from 219K. So is it going to be the same? Is it going to be higher? Is it going to be lower? I don't know. I would like to see how it goes. Like I said, I really don't know any of these fundamentals. You can never guess what the fundamental is going to be like. We can speculate, we can talk about it, we can waste our time, right? The market is still going to come the way. I mean, it's always, this is something that no one actually have full angle over. And that's why it is very important. It's a key, okay? Because this is the data that even the institution doesn't really have access to until it is being released. That's why they trade according to it, because this is, if it's technical analysis, it's easier stuff. Okay, bots can trade technical analysis, but you can. The reason why bots cannot last for a very long time, and bots also need human intervention, is because of fundamentals. They can shift the trajectory of the market in a matter of hours. All right, and bots always follow mathematics, zeros and one coding. Okay, the programming language. So that's why you need to understand fundamentals. All right, it's very important. So on Friday we have the German preliminary CPI month for month. We have the GDP in Canada month for month as well. And the United States we have the core PCE. Finally, the PCE is coming on Friday next week. So we're going to see how that goes. So that is the end of next week. We have very little fundamentals next week. Well, see how that goes. Anyways, so now let's come to the top setup in Austria. Let's go to the top setup right here on the Edge Finder. So you can see all my yen pairs are still very much intact at the bottom. The USD JPY, CAD JPY, CHF JPY, NZD JPY. So I'm still going to be holding on to these trades. You can see they are reading very bearish right here. That is very bearish. The score is -9 and -10. So I will be very, very much interested to add on to this trade if they break all the structures, and at the same time, probably, probably start trading very tightly. Okay. But if they fail to break below structure, I'll probably close them and look for another trade, as case maybe. Also for the back for silver, I'll also be looking for another buy opportunity. You can see the score is now 10 and is now staying above gold, which is also reading 10 right here. So what do you think? I'm gonna add on to my silver trade definitely. I'm not gonna touch gold. So believe me, I'm definitely not gonna touch gold. So I'll be adding to my silver trade and I would like to see how that goes as well. And lastly, I haven't really decided what to do, pound card or pound New Zealand dollar. Okay, but we're going to check the UK economy to see why we're getting a bullish reading on the pound based bet. Okay, we have pound card, pound New Zealand, pound Aussie, pound CHF, and pound dollar. All of them really bullish, bullish, bullish. and bullish, right? Five of them bullish. This is interesting. And the United Kingdom stock index also reading bullish. That is good. All right, so something is happening in the United Kingdom that we need to pay close attention to. And definitely, don't forget, this is how I was able to get all this trade on yen pairs. Now we are seeing the reading on United Kingdom asset as well. I guess we should take a look at it as how it goes. But first off, before I start taking a look at the pound pairs, the first thing I want to do is probably um, check the COT data. Let me see the positioning of the institutions. Let me see what they are looking at. Let me see where they are leading. Are they buying pound? Are they buying dollar? What are they selling? Okay, so starting with United States dollar, you can see right here, we still have 72% long positions. That is not good enough. All right. I'm definitely not going to touch pound dollar buy. Definitely not going to do that. All right. So I will still be leading. I will still be chilling on all my major pairs. All the dollar pairs, I will be chilling. I will not touch them for now until I see a clear cut fundamentals that really resonate with the technicals, because right now DXY is not looking very pretty. And looking at the US economic impact that I'll be showing with you later, it's also not looking very pretty. But then you can see the position of the institution right here. You're still leaning bullish. So there's a divergence somewhere. And I don't like when things are not really working out the way I want it to set out. I want everything to align 100%. The COT, the institutions are selling dollar. Dollar is bearish on technically, on the technical perspective, dollar is bearish. On the fundamental, which is economic ITMA perspective, dollar is also bearish. That is exactly what I want to see. And I want to see all these dollar pairs on top setup, laying there, staying around maybe positive 9 or negative 9, 10, and the likes. That is what I want to see, not all these neutral based dollar pair. That's nah, I don't want to get myself into that. So I just sit on my hands on the yen place and just enjoy the show, okay, from afar. So the CHF as well, you can see that we have a more bearish reading than the buying. So I guess shorting CHF JPY is a very good choice. You can see the Canadian dollar as well right here. Okay, you can see the Canadian dollar. You can still see that we have 88% short position. All right, short position. Well, we only had 11.37% by positions right there. On Europe, you can see we have 56% short positions. All right, which is very good. Now let's quickly talk about the yen. Okay, Japanese yen. You can see right here we have 62% long positions. And now let's look at the difference between the open and the close contract right here. The long contract go increased by what? By 3,400, and the short contract go reduced by what? 2,500. That's telling you something. Don't forget. Okay, so yen is ultimately strong, and it seems to be the priority of the institution as well. Bank of Japan is really, really ready to pump some money into the market, and they really want higher inflation, and they're getting it. They also want to hike their interest rate, and likely they might get it. Okay, they might likely get it very soon, sooner than expected. So this is really looking very good for me. All right. So that said, let's take a look at pound, and then we jump to the economic data because my time is fast spent already. Okay, so looking at the UK pound uh, position right here, the institution position on pound, you see that the institution is still leaning towards its average. Let me just point out, it's literally average. You can see we have 49.8% long position, 50.2% short positions. And but looking at it right here, you can see that we have 4,477 long contract added and 1,888 short contract added. So something I'm still working on with the pound. I think I should give it this week, this coming week. I don't know right now. You see all the pounds there actually moving around, showing some very good signs. Okay, throughout like on the top setup, okay, you can see them showing very good signs right here for very good position. Like let's buy pound Aussie, pound CHF, pound USD, pound CAD, pound New Zealand dollar, UK 100. All these things are saying something. The pound strength is resuming. But when you come to the COT data, it's a whole different story. Okay, there's still higher number of sellers than buyers. That is something. Okay, so a little bit of divergence somewhere there also. But when you now compare it with pound CAD and pound Aussie, let's check New Zealand dollar. But you can see New Zealand dollar is more sellers, okay, than buyers. Okay, short positions are 83.3%, and long position is 16.67%. Okay, that's also telling you another story, a very interesting story. Okay, something I'll be looking forward to. I will make a very serious video on this, then post it probably before Monday, so you see how these actually align with each other. But you can see the story being built up. Okay, slowly. The story is being built up slowly. So you need to know how to take advantage of it. We've talked about card debt before. Okay, 88.63% short positions. And we have, where's GU again? GU right here with 50% short and 49% long. So it's still a little bit not enough for me. Okay, it's unlike the yen that has 62%, 62.9% long positions. And that is more strength compared to these other guys. All right. So these are stories that you need to understand as a trader. These are things you need to really lay your hands on to better position yourself. And lastly, let's talk about the economic heat map. We can see the US economic heat map is not looking very pretty. I share this with my guys and all my students, all my mentees. What they are doing is, when should we close our trade? Should we close our trade? Should we take some part profit? And I told them to do whatever they want to do. Okay, but none of them is actually touching the dollar pair right now, because look at all of these. We have the GDP growth looks very bearish. Service PMI is not good. Retail sales number is not good. CPI, core CPI, PPI, core PCE, none of them looks very pretty. Okay, NFP is not good. Unemployment claim is not good. Job opening is not good. Okay, and we still have the institutions leaning bullish. Okay, isn't that telling you something? That should be telling you something. All right, and that is what I don't really know. I don't understand fully. And if you take a look at the technicals right now, looking at the chart, okay, the DXY, looking at DXY, it's still very, very receptive at the top. Okay, it's not getting its bearing fully. I'm expecting a very weak dollar right now. Like, dollar should be falling on his feet, okay, or falling on his back, as the case may be. But it seems to be landing on his feet right now. You can see right here. Okay, so this is not enough. This is not enough. So I'm still like very, very, very cautious about the USD right now, or USD pair. So let's quickly go ahead and talk about the UK economic heat map. And you can see right here, UK seems to be finding the bearings gradually. The retail sales was good, the service PMI was good, the GDP growth was good. The manufacturing PMI is not super good. The CPI and the PPI came higher than expected, which is not very good for the economy, for the UK economy. But at least now we have 3/3, which is very good. Okay, we have what? We have 3/3, which is fairly good. Let me just say that, fairly good. So, and this kind of like tally with what we are seeing with the COT data, because we have 49.8% buy positions, and we have the short position. Let me just say long positions, and the short position is just 50.2. So, I mean, this is tallied with what we see right here, what we can see right here. That is how to read the economy. That's how to follow the institutions, not by looking at some charts, looking at some candles. Okay, follow the economy, follow what the economy is saying. That is how to follow institutions. All right, in my own opinion, though. All right, like I said, I'm not an institution trader, and I'm just a swing trader, just trying to figure one or two things out. So that's that on UK economy. Now, looking at this now, look at the convergence. Okay, we have 60 over like 60, 64 point. No, I think it's 66 COT. Let me quickly check COT data for yen again. Yeah, 62.91. So we have 62.91 long positions, and that would give us like 38.09 short positions, right, on Japanese yen. Don't forget that. Now look at the GDP growth. It's good. The manufacturing PMI is not very good at all. Okay, it's not super good. Also, we have the service PMI very good. We have the retail sales very good. Inflation is very good, because don't forget the Bank of Japan wants inflation. Okay, and PPI also came quite good. Unemployment rate good. Employed person good. So let's say if we're going to take this literally as it is, anyways, literally as it is, we're going to say they're not good. But taking a look at it, we have 1, 2, 3, 4, 5, 5/3. So this corresponds with what we have right here, considering the position of the institutions. It still corresponds. You get what I'm trying to say, anyways. This is something I can go behind, not the dollar. The divergence in dollar is very big. We have those red data, and we have institutions still leaning 70% or above 70%. That is not enough. I want to see like 70% short position on dollar and like 30% long position on dollar. That would, yes, converge with the data in the economic heat map. So right now, that's why I'm not touching the dollar pairs. Okay, we're gonna get into the technical part of the story in the next video. So sit tight and watch the next video where I'll be discussing the pairs that we're actually be trading. But this is just explaining the economic top setup, or the economic data, or the economic story behind all my trade and how I plan out my trade. So I'll see you in the next one. Do have a great day and enjoy your weekend.